Hello everyone, here are the latest market news on April the 30th, 2020. Shares jump amid positive drug trial results. Asian stock rose to a 7-week high on Thursday, boosted by positive partial results from a trial of Gilead's antiviral remdesivir, which showed the drug could help speed recovery from COVID-19. MSCI's broadest index of Asia-Pacific shares, excluding Japan, rose 1.4%, tracking toward a weekly gain of more than 5%. Japan's Nikkei surged 2.8% to a 7-week high, and Australia's ASX 200 jumped 2.7%. China's blue-chip CSI 300 index ended up 1.2%, while the Shanghai Composite Index closed 1.3% higher. US and European stock futures also gained throughout the session, with EuroSTOXX futures and FTSE futures last added more than 1%, and S&P 500 futures climbed about 0.7%. France, Spain fall in the deepest recession. The French and Spanish economies slumped in the first quarter, marking the deepest recession in Europe in the post-war era. France showed 5.8% drop, the biggest since records began in 1949, with Spain's GDP tumbling 5.2%. The decline highlights the dramatic effect of government-ordered shutdowns, as just 2 weeks of closures and restrictions were sufficient to undercut growth for the entire quarter. Figures for the euro area, which are expected later on Thursday, will probably show the end of a 7-year expansion. Overall, the IMF expects the global economy to contract 3% this year, with the euro area dropping 7.5%. The French economy is already in a technical recession after a small 0.1% contraction at the end of 2019. According to Statistics Office in C, in the first quarter of 2020, consumer spending dropped more than 6% and investment 0.8%. In March, household spending fell 18%. Carlsberg reports drop in sales due to lockdown. Danish multinational brewer Carlsberg reported on Thursday that its sales dropped 7% in first quarter as increased beer sales in supermarkets failed to balance the closure of bars and restaurants during the coronavirus lockdown. In turn, the world's third biggest brewer, Anheuser-Busch InBev and Heineken, said it saw signs of recovery in China, its biggest market, where smaller outlets had reopened after volumes fell by a fifth in the first 3 months. Carlsberg suspended guidance earlier this month after sales at bars and restaurants, especially in Western Europe, were severely impacted as many countries were in lockdown. Higher sales in supermarkets could not compensate for a loss of revenue in bars, where volumes fell 6% in the quarter. Overall, Carlsberg sales between January and March came in at 12.9 billion Danish crowns, $1.88 billion, lower than 12.8 billion analysts' expectations. Shell cuts dividend, the first among oil majors. Royal Dutch Shell RDSA cut its dividend for the first time since World War II on Thursday due to significant impact at the energy company from an unprecedented drop in oil demand. Shell also suspended the next tranche of its share buyback program and said it was reducing oil and gas output by nearly a quarter after its net profit almost halved in the first quarter of 2020. The company's shares dropped 6.7% in early trading on Thursday, underperforming rival BP. Shell is the first of the 5 so-called oil majors to cut its dividend because of the fallout from the coronavirus crisis. BP and ExxonMobil have said they will maintain their first quarter dividends, while Total and Chevron will publish their first quarter results later.